Good morning, guys. Welcome to this Tuesday, January 20th. So yesterday was a short day. No lack of market movement though, because we had this Greenland tariff debacle going on over the weekend, and market gapped down in a pretty big way. It wasn't pretty at all. And we're looking at a market which is poised to potentially take this lower. Now, yesterday's trading was kind of odd that way because they gapped down in a big way, way down. We closed up here at the 69.80s. They structured for the long potential move. Then you have a geopolitical event, or some news happened over the weekend. Everything gaps down. We're down at the lower end of the range. We're taking it out. They've been down all the way into this mode here at the 68.40s, 40 to 50s. And backing off a little bit from that, but I'm thinking risk off is probably the mindset right now in the market. Now, yesterday's trading day session, we had a nice little move to the upside. It was surprisingly strong. Got me caught a couple of times in a couple of trades. I did little bit of trading yesterday. But that was surprising because you were expecting more the short side to be more dominant, but no, yesterday wasn't the case at all. Now the overnight is also to the downside. So the question is really, are the market going to believe that this is a negotiation tactic, or is it going to be just doing the normal flip out, sell off kind of thing? That's going to be the big question for today's trading. Now, news for today is non-existent. There's no news coming out. Is this Davos thing going on as well? It's going to be dominating the news on, on the business shows. Tomorrow we get the construction spending, housing starts and permits. Thursday we get the PCE read, two of them from October and November. We get a GDP read from Q3, not from Q4 yet. So little news coming out on Thursday. Friday we get PMI and leading indicator consumer sentiment. So that's what we got going. I think Thursday could be a big news day, depending on that personal income numbers come out. Remember, they have this inflation read in there as well, the PCE index. But right now, the way it looks, I'm going to be in a risk-off mode. I mean, I was there yesterday, got caught a couple of times. It was surprisingly strong. There was no sell-off after that little attempt in the morning. But that was a nice squeeze. It's a brutal squeeze, I should say. Squeeze across the whole range and then some. It doesn't look much on the F1 but that was a pretty interesting rally there on yesterday's trading. But I mean, I would look to sell strength against the 68.85s, 6900s, and I would be mindful that if I start seeing some strength in it, I'm not going to be stepping in front of it too super aggressively. I'm going to look to sell strength, but I'm going to be a little bit less aggressive on the entries. Because yesterday I got my fingers burned a little bit just by the fact that they was like a relentless reverse squeeze or short squeeze, if you wish, and squeezing a lot of people out of the market. So I'm watching it now. If they structurally take out that 69.15 I have marked up here, then I think we're back up in this range bound area. I would be back about that ledge, that 68.90. You get up above that 69.10, that 5 little ledge. I think we are back in this upper range again. But right now it feels very much like we are in risk off mode, and I'm thinking that we may have this is exactly what the market needs to sell off, if you know what I mean. If that's the good excuse to sell off, create some havoc, shake out some positions, that could very well be what happens in the day session. If they stay below this area, the 3 little ledge at 68.90s, as long as they stay below it, which they are right now, I would stay on the short side of this, looking to sell strength. The 68.85s here, the 6900s are the ones to pay attention to. This used to be 69.90. I adjusted it down a little bit. But these two resistance areas comes out, we have a shot at potentially maybe making an attempt to test these upper levels, but not until these upper levels gets taken out. The session highs at 69.15s, the 25s. These two areas are the one I'm going to key in on for a potential shift to the long side or a recovery, if you wish. If they come out, I'm going to assume that okay, market doesn't believe Market is taking it as a trading tactic or negotiation tactic, and I'm not freaking out. As long as it stay below these areas, I would just be on the side that yeah, the market is going to freak out as it always does, and it's going to be more selling than you expect. Let's see how it develops in the session. Now, they take out the lows here at the 68.50 in the mode here from this prior distribution. Yeah, bets are off. I just stay on the short side at that point. There's no point of trying to buy against support areas. If you're gonna be buying opportunity, it's not gonna be like a V bottom that you have to be super aggressive on. It's gonna be a bottom forming. You're gonna have plenty of time to get long if you want to do that. So that's the way I'm looking at the market to get started right now. So geopolitical still hullabaloo going on. By now they should realize how Trump negotiates and how he throws stuff out there which is provocative, and you should see the European you react to it. And the Danish guy sending troops to Greenland and having emergency meetings is like, yeah, all right, guys, get a grip. He's not going to go in there with force and take Greenland. He's negotiating with you. So anyway, but the market is a market. We'll see how it's going to shake out there and how it's going to do it. So that's how we get started on the ES. So looking to sell strength against that 68.85, 6900s, maybe up to that 69.15s for rotations down. Then we'll see if they can take those out and stay above it, or if that's going to be it, or if they don't even get that high. They just stall at the 68.85 and they start taking this lower. As long as they stay below that 85, so I'm going to stay on the short side of this. Looking for early strengths for short setups, and then see how this develops. Now I did say I took a trade. I'm down 67 right now for two contracts on the ES, and that trade was back here yesterday. That was back there. Okay, this was yesterday's trading, I think. Was it? This is from the 16th. And that is from Friday. I'm missing where's my. There it is. So I got short. This is the trade here. So this is the morning on Monday. I got short here on the way up, and looking at the midpoint and repaired it once. And then you can see that squeeze on the upside. That's absolutely creamed you. It's not, that's a lot more than you would expect. But so that's kind of what ended up there. But and I made it back on the Nasdaq on a different trade, similar trade. Most of it. So I'm gonna starting off with a little bit mixed bag here. On the Nasdaq, it's even worse of a gap down. Those are the ones going to get creamed, I think. Can get hammered pretty well. So you see that we are way down here. We're taking out support. We're down in this lower range. We have taken out this key area, the 350, 360s, solidly below it. And instead of us guess how far they can take it. The next levels of good support is going to come down here at the 24,000s to 24,300, 3 to 400s. That's when you get really good support again. So Nasdaq could be an experience today for sure. So looking to sell strength on the Nasdaq as well against the right now against the 240s, 280s, 320s, 360s up to the 420s for rotations down. Above the 420s, that would be getting back about that if a big ledge we have, 3-4 letter ledge, 5 letter ledge here on the profile, and then back up above this area. So they can get up above that 360 to 420 area. These are these two areas. We have a shot of getting back up in this upper range, but whatever is going on right now, unless the market really gets aspiring and start thinking about what really is going on, then I think the market's going to be in a risk-off mode. Anything happens like that, that's going to be that's how the market is, I guess. So looking to sell strength against up to this area, the 430. So against that 280s, 320s, 370s up to this 430s for rotations down. About 430s, we going back more range bound and start thinking about maybe we have a little recovery going on. But right now, I'm thinking we're probably going to see retest of these lows, maybe lower in the day session. And so in the end, buying against support at 160s and 25,080s, it could be doable. I'm not going to be very aggressive on that one until I see good base forming and some strength going. And you could get these areas too. I mean, they run it lower a bit, and then you have a reversal, and they run it across the whole range and then some. That is very possible. I mean, that's exactly what happened in yesterday's trading, and that was not a high volume trading day. So there's a lot more range than you can think. But when they do that, they can easily run it across the range like that and get you caught. In other words, you try to get short on a pullback, and you find yourself just stuck in that. The only tip I can give you on that one, I should follow it myself, is that if you take that first on the pullback, a decent pullback, you get short and it doesn't work out, just stop doing it. I mean, I did yesterday. I made a mistake in a couple of spots to re-engage it at better levels, and you just have to be mindful that if they're going to run it higher and run you out of and squeeze the shorts, then you get caught in that trade as well. So I would just be a little bit less aggressive in that second attempt. And if it doesn't work on a decent pullback, chances are they're going to try something like that. And just to stay away from it, just sit back and kind of watch the market, because probably going to be quite a few cross currents going on today. But starting off from the short side on both ES and NASDAQ, see if they can get up above the key resistance areas and hold above it. And if not, we are staying on the short side and see how far they can take it on the downside, because that's chances are that's going to be the theme of the day. Looking at the bonds, finally, a bond market is repricing to the downside, so yields coming up a bit. And a pretty good move to the downside on the bonds here. They were, this is the, so this is a overnight. This is the gap down from, or not quite a gap down on the bonds, but they were trading up here at 115 and looking at the bigger picture. So of course now the bigger picture becomes a bit more important here. So now you can see these two high volume areas to be going back and forth between. Now they're breaking out to the downside. So they're taking out that 115s, heading down to down at the 114s right now, and repricing to the downside. Yields coming up. That's not a great sign. So bond market repricing a bit, and so yesterday's trading to the downside, a little baby session there, didn't do much. Now the overnight again repricing to the downside. We'll see if they're going to retrace a little bit or not, but as long as they hold below that 115s, I mean, we can go the next. You look at the volume distribution. The TPOs are okay here, but if you see the volume distribution, I have a nice ledge here at the 1308s. It's a little volume node. I have one here at the 1415s, which we are trading around about right now. So that's your short-term attractor. The next one down is going to be that 11308. So that's kind of where we are on the bonds. So I would trade that on a short side to get started. Let's see how far they can take it. Looking to sell strength against that 14, 15, 16. Against that mode, I wanted to mark that up, but it gets a little bit crowded. I can do that. I can do it this way. So you can see what I'm talking about this. So you make this guy a little bit tighter, this range right there, and then mark up this little area right there, that high volume node right there, because that's also going to be interesting on 14, 20, 19 to 20. So looking for short setups against the 15, 16s, 20s, the 24, 25s for rotations down. If they trade up above that 24, 25s, we have a shot of getting back to that 115 attractor again, but we'll see how strong this gets. But right now, I think the bond market is going to be starting from the short side, looking to sell strength up to that 1425 level. So that's how we get started on the bond market. Not going to be aggressive buying that. Buying opportunity at 114 could potentially reset up again. That retested and it failed, so they're trading back up again. Let's see what they're going to do there. So I'm going to be cautious on the bond market, because right now things are moving based on a geopolitical repricing of risk. And you had to just be a little bit cautious, try to figure out what the market really is trying to do here. But starting off on the ES and NASDAQ from the short side, assuming the market is going to be freaking out as it usually does. So then let the session start and let's see if they're going to start hammering it. And if they do, yes, stay on the short side on that. And if they start looking like they're retracing up past these resistance areas we talked about, then I would be a little bit more interested in the going back range bound above that 430 on the Nasdaq and the 615 on the ES. Sorry, yes, 69.15 on the ES. So that's how we get started, guys. Let's see how this all is going to go. So we'll a couple of trades in from yesterday, and then we'll see how this whole thing shakes out. All right, guys. Good trading, and I will see you back at 11:30 for the next update. All right, guys. Later.